Let's take a look at some information and charts on Maker for Brave New Coin. So the MakerDAO initially used ETH as a single collateral for loans. They quickly wisened up and moved to multi-collateral loans. They are part of the lending and borrowing pillar in the jewel of the crown that is DeFi. They've also cleaned up their app or usability aspect and have an app now called Oasis. We'll take a look at that. They have a governance component, which for the most part doesn't matter. Across the board, all of DeFi, it's never going to really matter until it's a big issue, sort of tacked on as a use case or a potential use case. But for the most part, the general populace doesn't pay attention to any of that anyway. But you can always see the voting mechanisms or what's going on, who's voting, maybe more so for DAOs than most things. Voting actually matters. You can vote on all aspects of the DAO, all metrics for the DAO, that sort of thing. But I highly doubt most people even pay attention to any of that stuff. Looking into their app a little further, oasis.app is the URL, but you can connect any wallet, hardware wallet, software wallet, browser wallet. And the issue I have with Maker over Comp or Aave or anything else on any other chain is for, again, the general person is going to look at this and they're going to see stability fee, collateralization level, and they're probably going to get turned off by this. And maybe that's a good thing, because maybe people who don't know anything about anything shouldn't be getting involved with this stuff. But when you compare this to Comp or Aave, the user interface is much easier to figure out. It's 2 clicks, it's different information that's given to you. Again, this is my feeling, my opinion. I don't know if people generally care about this stuff, but I do think the other platforms do it a little better as far as onboarding. And you can open a vault. This is nicely explained to people. You can do XYZ. You need to hold. Ideally, people know what collateralization even means, but there's definitely a learning curve for people. And there's always new stuff here. I don't even know what this is. Never even seen it in my life, but they're always adding stuff, voting on stuff, doing stuff and things continuously. So as a protocol, it's pretty rock solid. The token itself, like most of DeFi, is kind of just whatever. There is a rev share component, but again, is that going to move the needle for most people? No. Has TVL moved the needle price-wise? I don't think it has. It may have played a small role in that TVL for Maker was or is higher than everything else. But when I'm trying to look at all this stuff together, what matters? Does on-chain activity matter? No. Does lending and borrowing levels matter? Maybe, but probably not. TVL, no. Protocol revenue, no. None of that stuff really correlates with price at all. It's just pure speculation at the end of the day. We can dig into the stats a little deeper as far as the total DAI supply at 8.9 billion currently. And if we look up what is in that 8.9 billion, much of it is USDC. And some of the other newer lending and borrowing protocols, Spell, MIM, whatever it's called, have sort of attacked this makeup, because is it truly a decentralized stablecoin if most of it is USDC or a large percentage of it is USDC? I don't think so. I never thought so, but finally that caught on with people. The USDC as a percentage of the total notional has gone down, probably because the ETH notional has gone up. But there's still a significant, it's at least 2.3 billion plus of the underlying loans are USDC. So do I care? Is that going to affect how I trade this? No, but as long as people know that, yeah, this isn't exactly completely decentralized under the hood. And it's a good thing. You want multi-collateral, you want everything. You just don't want most of it to be USDC, because at that point, why not just use USDC? Why jump through all these hoops to lend out your USDC? Sure, you maybe get some leverage, but it's just a bunch of extra steps. They also have a burning component, and they have a PE ratio equivalent, currently on the higher end at 35. They haven't done any burns recently. These are the total burns since 2018. The burns have slowed since mid-year and haven't started again. So if they were to start again, I would expect price to move in a bigger manner to the upside. If anything, the one thing that actually matters is the burning component. That's just basic supply and demand. If we look at when the burning happened or when it got ramped up, all of DeFi was also bullish, but it certainly helped that burning was ramping up from November 2020 to April 2021 to push price to where it went throughout that period. And if we look at that PE ratio equivalent or market cap over annualized revenue, Maker's up here at a 42 multiple according to the block currently. Sushi down here at a 4x multiple, and then Synthetics just making virtually no revenue relative to market cap at a 185x multiple. So generally you want to be focusing your attention on stuff on the left side of this graph. And we can have the conversation about protocol revenue versus supply revenue. I think generally most people don't even care anyway, so it's not even worth going into. But currently, Uni, for example, doesn't have a baked-in protocol revenue. It's all based on volume. Makers is all based on protocol. So in a sense, they could both adjust to that model slightly. If UniSwap did so, they'd do much better on this graph. But these are just protocol decisions that may or may not ever see the light of day anyway, and nobody probably won't even care about it, right? Like, I keep saying that, but I've searched so far high and wide trying to find anything that makes sense for DeFi as far as what actually impacts price. Supply demand, definitely the most important. If we look at the DeFi dashboard on DeFi Llama, TVL, I like how they show TVLs across everything. You know, you can see every single chain that's ever been created since the dawn of time. It seems like Curve and Maker are the two top TVLs across the board. Aave up there, another lending and borrowing, Comp, lending and borrowing. If we just look on Ethereum, Maker is definitely number one. And it's only on Ethereum. That's also worth noting. Whereas Curve, Aave are multi-chain. It makes sense to go multi-chain if you're lending and borrowing. I don't know if Maker's ever going to do that, but obviously security is an issue the bigger your attack surface. But currently 272 billion across the board, Maker's sitting at around 20 billion. And that is an all-time high for them. The bank has them at 18.8 billion, but that is an all-time high in TVL. Price, again, show me on the chart where you could tell where TVL was increasing. You can't. It doesn't mean anything. Borrowing volume, also all-time highs. Doesn't impact price. Hasn't yet anyway. Liquidation's just flat. Nothing going on there. Calls flat. Not much has changed generally across the board. So activity-wise, TVL, lending and borrowing, increasing massively. Price of the token doesn't really seem to care just yet. Here's borrowing volume across Aave, Maker, and Comp. And again, you can see Maker here at the top with 8.8 billion in borrowing volume. Comp close behind that, and then Aave at 7 billion total. If we look at on-chain stats for the token, if we look at the transaction counts in the line here, they had been declining basically since the all-time highs, slowly picking up again. As the speculation picks up, so does the on-chain activity. And it's important if you see rising prices that you do see on-chain activity rising, otherwise it's just speculation. Most of this is speculation related, most likely, but it's important to see something on-chain. You know, you can't just see continuously declining on-chain metrics with a rising price. That's generally pretty bearish. Average transaction value is rising along with the ETH fees, which are still quite high right now. Active addresses slowly ticking up here on a monthly basis, down significantly from all-time highs. All of this was speculation again, so it's important to see that pick up again. NVT, inverse metric of economic utility relative to price, has been declining slowly, which is actually bullish. And you want to see that as low as possible. That just says, much like the PE ratio, you want that multiple to be declining or low, because that says there's an increase in on-chain activity relative to market cap. And if we look at MVRV relative to price, MVRV is another metric for market cap versus on-chain activity. For most coins, they top out at around 2x multiple. For most of DeFi, again, has not correlated, does not matter, and or we don't have enough data yet to really see where that true multiple is. The 2x multiple got hit on March 3rd and price kept going. Currently, that multiple is at 1.1. So if price does turn back to all-time highs, I would definitely watch this and see if MVRV creeps past 2. Then I would start to get nervous. And it seems for, at least for the last run in DeFi, if MVRV is declining and price is rising, that should also be a bearish divergence, or should be treated as such. Even though MVRV declining should be more bullish, much like NVT, it may represent just a cooling down of speculation. Not really sure. Just weird across the board with MVRV there. If you look at all the stablecoins that matter, Tether is 60% of that. USDC is 25% of that. Binance USD is 10% of that. And then DAI, the MakerDAO, is 6% of that. And it makes me wonder if eventually every lending and borrowing protocol will have their own stablecoin. if not for regulatory reasons, they probably would already have that, because why not? If exchanges can do it, why can't decentralized exchanges can do it, right? Why can't lending and borrowers do it? So we'll see if there's any regulatory clarity, and why doesn't Uniswap have a stablecoin? It's probably better that they don't, but I don't see why Sushi doesn't start to branch out into that realm. Maybe they all have enough regulators on their back already. Flipping gears to technicals, where things make the most sense for DeFi. Maker had been on this rising trend line basically since January, and it was threatening lower lows. It was threatening a head and shoulders breakdown. It survived that. It survived the 2K retest, and currently looks decently okay. Does it look as bullish as most other things right now? No. But the next test is going to be this local high at 4K, and then after that, it's going to be 6K. This could set up for a high time frame W here. But as long as this can stay above 2,500 with a bullish 5,200 cross, it has a decent shot at some sort of bullish continuation. First 4, then 6. I don't know if it gets much past there without a significant burning in the Maker token. Volume on Binance is flat. RSI showing a bit of a tiny bear div here, but nothing to be super concerned about. On the cloud, it's actually bullish for the first time since April and May. You have your bullish 5,200, bullish Kumo breakout with price above cloud there for the first time since May. You're just waiting on that bullish Kumo twist in the cloud to tell you it's safe to jump back in this trade. But in general, it looks fine to me for a run, at least until January. Usually alts tend to roll over first week in January. You got some late rotation going on at the end of the year, and then everything sort of collapses, or historically has, aside from January 2021. Looking at MakerBTC, I wouldn't trade this if you paid me, because it's just so all over the place. You don't really know what's going to happen tomorrow. This thing was in just some sort of crazy free fall. Previously, it had tons of support at that level, and that didn't matter, right? It had the death cross here. So now, I guess it just ranges from 04 to 06. There's no signal here that I can see. It's just a giant mess. And against ETH, it's similarly a mess, and at the same time, a just continuous bearish downtrend. This did have some sort of head and shoulders or multi-shouldered head and shoulder, multi-headed something monstrosity here that this was clearly the level that it broke down from at around 105. And anything that's been flat against BTC or ETH over the past 2 weeks has just gotten slaughtered. And this is what it looks like, right? It just continually loses value against BTC and ETH. It doesn't quite look like a buy yet to me, even though this could mean revert. Again, this is just, if you want to buy knives, go for it. It's definitely not bullish, so you're probably going to lose money relative to ETH. It's up to you what you want to do here. For me, I would wait until there was something on RSI showing me a bull div or a double bottom or something on the chart here. Because the way this has behaved on both these pairs, it just looks like it could easily slip back to all-time lows, no problem. And lastly, let me just mention the ETH-BTC fund and DeFi portfolio. I trade for Techemy Capital and Enzyme Finance, a non-custodial portfolio management tool where you can send ETH or USDC, or just watch what I'm doing. You can see everything, including AUM performance allocation here, all the vaults I'm in on Yearn, Comp, and Aave, as well as the trades in the trades tab down below. That's all I have for this one. Like, dislike, comment, share, subscribe. Happy trading.